Welcome back to another bloody Friday. So the stock market is selling off and maybe a little bit triggered by Elon Musk's comments around the economy. He's saying like we're going into an uncertain period, possibly a recession. 10% of Tesla's workforce needs to go. Maybe some of these comments are misread by the media. I think it's more about making Tesla more lean. I don't think there is an issue with the demand for Tesla, and I think actually Tesla would be able to weather a storm in an economy that is deteriorating. On the other hand, we have some very positive numbers on the jobs, but this might be lagging data, this might be old data, and so the actual state of the economy may actually be really worse and maybe more into what's Elon seeing out there. If you want to see my takes on that, you can join our Patreon. So I've just done a long post on this issue, but this video is about NIO, and well, you have a chart here in the background, and I want to tell you that if you're buying NIO currently, you are actually buying NIO at $3 a share. Not exactly, of course, but let me explain this. So basically what you're seeing here is a metric called enterprise values times sales. So this is not the stock price of NIO, but it's kind of a valuation metric. So on this metric, NIO has been going IPO at around 30 to 35 enterprise value to sales. So the enterprise value is basically kind of the market capitalization, but also considering debt and such other metrics. So it's kind of a clean valuation of the company and then comparing it to the sales, so the revenues that this business is generating. And well, basically it's been IPOing at this larger number, I would say, and then quickly dropping off. And then you can see it was going through a very, very hard period between 2019 and July of 2020, where NIO was valued between 2.3x and maybe up to 4x of enterprise value to sales ratio. And yeah, this is actually the time when NIO was almost bankrupt, right? So they had not much cash left. NIOs weren't selling particularly well. I cannot remember the actual sales by heart, but it must have been a low number back then, and also burning lots of cash quickly. And so they were kind of getting bridge financing from time to time and then starting to negotiate with various local governments, including the Beijing government, where they finally didn't get actually any support, but then ended up getting the funding by the Hefei government, which in result, when all of these bankruptcy fears went off the table, quickly recovered to more than 20x of enterprise sales. Enterprise value to sales ratio there, and then kind of peaked by the start of 2021, and this also came together, you know, with this big multiple expansion here due to well the COVID trade basically, right? And afterwards, of course, this big multiple contraction. And what you can see is currently we're trading at around 4.4x enterprise value to sales, and so that means in relation to where the company is now, the market capitalization in relation to the sales that NIO is doing, it is at the same metric here than it has been during this very painful period between 2019 and 2020. And that's actually where I bought in back then. And of course, the stock price is much higher now. It's close to $20, not really yet, but much higher than it was trading back then, which was below $3 a share, right? So yes, if you're just looking at a stock price, then you would say, oh, NIO has already appreciated a lot. But based on this metric, actually, like how the enterprise value is relating to the actual sales numbers that the company is doing, it is actually back at these very, very low levels. Now, the question that you need asking yourself is, going forward, will NIO actually increase their sales? And second of all, will actually the markets possibly turn around and also look more into the future? So that's also what's happened during this period, because the interest rates were at a record low. The market was more looking into the future, at the future cash flows that are to be expected from those revenues, and ultimately when NIO will be breaking even. Right now the market is not very forward looking, right? So it's rather looking at companies that have real profits already, and so that's why most of the technology stocks that have no positive positive earnings right now are out of favor, and the market is very short-term oriented and looking only at a very close distance future here. And so, yeah, you may ask and wonder yourself whether or not NIO will increase their revenues in the future, how will be the growth in this area. If their revenues will be going down, then this would be a way how actually this metric could go up again, because if the revenues are going down but NIO stays with the stock price where it is, this would actually increase this ratio here as well. But it's maybe not so likely that actually the share price stays up there and the revenues are going down, right? At the same time, if you assume a future in which NIO starts selling more and more cars and maybe has revenue growth, then ultimately this metric would go even lower here in case that the stock price is not going up. So this gives you kind of a hint to think around NIO stock, where it is today in relation to where it has been trading in the past, how the stock price relates to the actual fundamentals of the company, and it maybe gives you something to think about where NIO might be in the future and also where the stock price might be in the future. So you need to figure out that for yourself where you think that might be. Thank you guys for watching. Have a good weekend despite the sell-off, and then see you in the next one.